And welcome to this particular episode. And in this session, I want us to talk about journaling. Okay. So remember, we have looked at a couple of things. Remember the last time I talked about what a good trade actually looks like, even when it's a losing trade. And that was to help you understand that you can have a good trade, but still it can be a losing trade because market conditions do change, right? So, and in today's session, basically, I want to talk about how to journal trades the right way without overcomplicating it, because I have come to realize with my interaction from with different traders and especially newbies that yes, they are journaling, but there are no results, there are no improvements. Okay, so and a journal basically what it does is to help you be able to recognize patterns so that you can be able to improve the next trade. So most traders are definitely they journal their trades and still don't improve. So what you realize is that not because journaling doesn't really work, but because they journal the wrong things. And journaling is supposed to be to help you create what I call clarity. So it's supposed to help you create clarity. But for most traders, you realize that it becomes a busy work. And again, the reason why even they don't journal because they see it like more of a lot of work that needs to be done. But again, it has to be done so that you can be able to see improvements. So it becomes a busy work, spreadsheets, screenshots, notes, metrics, and yet the same mistakes keep repeating. So in this video, I'll show you how to journal trades the right way without overcomplicating it, so each trade actually makes you better. And please pay attention as we discuss these things because they are very vital, they are very important to you. So this video is for the traders who journal inconsistently, journal too much, and learn too little, or stopped journaling because it felt pointless. So if your journal hasn't changed your behavior, then this that I'm going to speak about is going to change your behavior. Okay, so here's the core idea that I'll share with you upfront, even before we dive into the context of this particular topic. A journal is not a record of trades. A journal is a tool for pattern recognition. So if your journal doesn't reveal patterns, then it's just a documentation. Okay. So, and why do most traders journal wrongly? You realize that this comes from a perspective or whereby most traders think journaling means writing down entry, stop loss, take profit, win or loss. Okay, so but what I can assure you, capturing the entry, stop loss, take profit, win or loss, that's not journaling. That's basically bookkeeping. Okay, so bookkeeping tells you what happened, but journal should tell you why this keeps happening. Okay, so, and some of the common mistakes that traders do here is that they track too many metrics. They write emotional essay without no structure. Journaling only winning trades. They don't journal the losing trades, or maybe probably journaling only the losing trades and not capturing the winning trades. Copying templates that doesn't match your strategy. Okay, and what are the results from these common mistakes? Information overload, which is equals to zero insights, because it doesn't give you insights in terms of what you need to improve in. Okay, so the only purpose of a trading journal is basically to help you trade better. Okay, that is the only purpose of a trading journal, to help you trade better. That is the job. The only job a trading journal has, I'll repeat again, is to help you uh, trade better next time, right? So, not to look professional, not to impress anyone, not to build a fancy spreadsheet, but to help you trade better next time. So, every journal entry should answer one question: what should I repeat or avoid based on this particular trade that I am journaling right now? Okay, so that is the question that it should answer. What should I repeat or avoid based on this trade? If it doesn't answer that, then delete it. Okay, so, and I'm going to share with you 5 things that you must journal. 5 things that you must journal. You only need 5 elements actually, or 5 things that you must journal. Anything more is optional, but again, you need to avoid information overload. Okay, so the first thing that you should journal is your reason for entry. You need to answer the question or journal, why did you take this particular trade? Not about bullish, not about the trade looked good. Be specific here, because people may say that I took this trade because the market was bullish. It was a buy entry, so I took a buy because the market was bullish, because it looked good. That is too general. You have to be specific in this case. So, for instance, to be specific, you have to specify structure break, maybe liquidity sweep, session alignment, model confirmation, such kind of things, because specific really matters a lot. So if you can't explain it clearly, that's already feedback to you that that was not really a good trade that you should have taken. Okay, so that is something that you need to really understand. Then the second thing that you need to journal, or that you must journal, is risk and position size. So how much did you risk? What amount? This basically helps you to reveal the confidence level, the emotional exposure, and consistency. Because risk inconsistency is basically a red flag most traders ignore. Because if maybe probably you take one trade right now, you are risking 1%. You take another trade, you're risking 5% because maybe you thought it's a A plus setup. So there is a lot of inconsistency, and that inconsistency basically is a red flag that most traders tend to ignore. So the third thing that you must journal is your execution quality, right? Did you execute as planned? Was it a early entry, a late entry? Did you chase the market? Did you hesitate? Was it a perfect setup? Or was it a perfect time to execute the trade? Why? Because you realize that execution errors is not a strategy, and this basically causes more losses. Okay, so if you have execution errors basically, and not strategy errors but execution errors, right? So you realize that your strategy was fine, but you had execution errors. Maybe probably you took the trade early, or maybe probably you took the trade late, or maybe you chased the market, or maybe probably you hesitated to take the trade, right? So these are execution errors, and these errors actually even cause most losses in trading. So the fourth thing that you should journal is emotional state before and during the trade. And this is what most of the traders don't really capture. This is very critical. Before entry, right? Before entry, are you calm? Are you bored? Are you impatient? Are you confident? Are you anxious? Which state of mind are you in before you enter that trade? And during the trade, you have to capture your emotional state. Were you stable? Were you stressed? Were you tempted to interfere with the setup? Why? Because this, when you capture this emotional state of mind, they will help you reveal the hidden leaks. And at the moment you understand these hidden leaks, therefore, you will be able to put your best foot forward to be able to rectify or to be able to seal those kind of leaks, right? And the fifth thing that you must journal is the lesson that you learned from that trade. Just one lesson, okay? Only one, not five, not a paragraph, but one lesson. Just one clear takeaway. You get my point? For example, you can say, I trade wars when I rush entries during London Open. Another example, maybe you can say that I hesitate after 2 consecutive losses. That's a lesson. Another lesson maybe you can have is that I break rules when I risk too much, or when my risk is too high. So that's improvement, because now if you have this one lesson, basically it means you're going to do something so that you can be able to improve that particular lesson. Remember, it's only a fool who does same thing consistently expecting different results. So you have to learn from you have to learn from these lessons and improve. Okay, so um and therefore, with that, with those 5 things that you have to journal, anything else that you want to journal is optional. You can, of course, maybe probably create a flashcard of those entries. You can take a screenshot of your setup before entry, or maybe the moment you enter the trade, and then thereafter you can take a screenshot once you execute the trade, and you have them in your trading flashcard. This flashcard will definitely help you to be able to recognize those patterns. Anytime maybe you are trading and you're not sure if this is the particular pattern that is unfolding, you can open your flashcard and look at the past screenshots. And that is basically going to help you build confidence in terms of recognizing these patterns. Okay, so what should you not journal? Because again, you're not journaling everything. So what I would recommend is that do not obsess over every indicator value, every candle detail, massive trade description, a complex scoring system, or maybe having like a 20 column spreadsheet. That's too much. Okay, you should not journal such kind of things, because more data does not mean more insights. Actually, we say in trading, clarity beats complexity. Okay, clarity beats complexity. So your journal should give you clarity, and not about how complex it is, but it should be able to give you clarity. So if maybe probably you find that journaling feels heavy, then you won't do it consistently. So you have to really change your perspective about journaling. It's not too much work, right? Sometimes it feels too much work, maybe probably when you find that you have overtraded. You can imagine someone who is journaling like 10 trades in a day. That's a lot of work. Of course, you'll get tired. Motivation will lack, right? So and the reason why we journal again is because we want to do what we call a weekly review. I recommend a weekly review. There are some who say monthly review, but monthly it's really quite a big. So for me, I would recommend a weekly review, whereby because why weekly review? Because this is where growth happens. The market opens Monday to Friday, and then over the weekend it closes. So that gives you a window for you to be able to journal those trades, for you to be able to review those trades, right? Of course, I would expect you to journal your trades daily, and then now over the weekend you take some time to review. Okay, so daily journaling captures the trades. Weekly review will help you to capture the patterns. So once a week, maybe probably on a Saturday, on a Sunday. Mine, I like doing it on a Saturday, right? So ask yourself what mistakes showed up most. Okay, so identify those mistakes that showed up most, and come with ways that you can be able to improve those mistakes. Okay, so ask yourself what setup worked best. Okay, so and capitalize on those setups that really work best, because that means that's where your strength is. When you can also ask yourself, when did I break rules? So identify those instances when you broke the rules. What made you break these rules? What can you do to avoid breaking those rules in the future? Okay, so also you can ask yourself, what emotional triggers keeps repeating? Am I fearful? Am I trading from FOMO, taking maybe probably late entries? Am I hesitant, right? Am I taking trades too early, right? So that's important. And the moment you identify those emotional triggers, then you have to come up with actions to help you overcome those emotional triggers. And that's where adjustments are made. Okay, not trade by trade, but pattern by pattern. Okay, pattern by pattern. So the reason why I'm sharing this is basically because I used to journal to feel productive, not to improve, right? I used very much to journal just to feel productive, and there was no improvement. I kept on repeating the same mistakes each and every week. Okay, so but once I was able to simplify my journal and focused on behavior instead of outcomes, my execution tightened and my results followed. Okay, and I believe if you follow these formula that I've given you, things to journal and everything else that I've said in this particular video, then your journaling should improve. and your journaling should improve, and you should be able to see patterns, weekly patterns that repeat themselves, and that's actually growth that you're talking about. Okay, so let's lock it in even as I conclude on this. So a good journal, what we have said is that a good journal reveals patterns, a good journal simplifies feedback, it improves execution and build self-awareness. So you don't need more data, you need better questions. Journal to change behavior, not to record history, right? So in the next video, we'll talk about why most traders quit right before consistency, and how to recognize the phase you are in before you sabotage your progress, right? So see you in the next one.